Welcome back, students. Now here we're dealing with impairment. Why are we dealing with impairment? Impairment of asset is designed to ensure that an asset carrying amount does not exceed its recoverable amount. Now, if you are an individual, let's say for an example you buy a truck, right? If you buy a truck, there are two ways in terms of which you can recover your money, the one that you paid. You can sell the truck and get the money back, or you can use the truck. When you use the truck will earn you money, isn't it? We call it value in use, right? So that usage of the car will generate income for you. So in accounting, what we always do, we want to make sure that the carrying value of that truck is the highest between when you use it or if you can sell it. It must basically, that carrying amount must always exceed the highest of the two. If it doesn't exceed the highest of the two, then there's an impairment. Right, you cannot show in the books an amount that you cannot recover. If, for example, your carrying value is higher than the highest of the two, of the value in use and your fair value at disposal, you cannot show a recoverable amount a carrying amount that is high. So you need to adjust it. Now, the carrying amount of an asset should reflect the economic phase of an entity and that is expected basically to receive, meaning we need to have economic benefits in our books that is justified, that is expected to be received from this asset, right? Now here they are saying there are only two options for an asset. It's either you dispose it or you continue using it. That's how you recover your money, like I've said, right? So if you then look at it this way, how do we determine? It's very important for you to know how do you calculate these values. At disposal, we want the net amount that we could obtain from the disposal, which is the fair value less the cost of disposal. Sometimes it is the price, the selling price minus the cost of this cost of disposal. We are talking about the situation whereby if, let's say, you want to sell a car, you take it to a dealership and the dealership says, okay, we'll sell it on your behalf for 80,000, but we want a commission of 8,000. So you can see that 80,000 is the selling price, but if you have to pay them a commission of 8, you are going to remain with 72. So your disposal amount is that one of 72,000, right? Or you continue using the asset. The amount expected from the continuing to use the asset, which is called the value in use. So when we are testing for impairment, you take the highest of the two, the one at disposal or continued use. You always take the highest of the two, but you need to know how, especially the disposal one, is calculated. It is selling price minus the costs of disposal. They can be commission, it can be other, basically a cost, right? So the carrying amount should be assessed against the recoverable amount. The recoverable amount is the highest of the assets fair value less cost of disposal and the value in use, like I've said, right? Now let's look at an example in terms of applying what we are saying. These figures also are included in your study pack. You'll see them. I think it's example 2. This one, the other one that follows is in example 3, right? Under PPE. Now here they're saying there's an office equipment that is depreciated 15%. The office equipment was purchased on 30 June at the cost of 175. On 31 December, the directors determined that the value of the office equipment was impaired and they obtained the following information. The value in use is 40,000. The office equipment can be sold for 55 less selling cost. Now remember, selling price is 55 less the selling. So this amount here is 50,000. 55 minus 5 is 50. The highest of the two is 50,000. Do you see? 40 and 50. The highest of the two is 50,000. That's the one we are going to use, the highest, right? Now, what you must always do when you are dealing with this thing, you can see here they are saying there were no other additions or disposal of equipment during the current year ended in 2022. So they're limiting to what we are saying here. Now, let's start here. You see here, you are buying the asset. According to the required, you are supposed to do a PPE note by 31 December, right? So the first thing you do, look at when the asset was bought. Look at when is that impairment being done. It's 31 December. Do you see? Here. So make sure you calculate from here to that date when the impairment was done. Find out what is the carrying amount by that date. Right. What is the carrying amount of this asset by that date? Right. Now, let's come here so that we can deal with this thing. So this thing is 175. Right. For the first year, when it was bought, remember it was bought in June here. You can see you can see here 30 June 2011, it's 175. Right. So the first year, this was the carrying amount. Cost minus the depreciation for 6 months, the carrying amount is 161875. That is 2011. 2012, the depreciation is 26250. Right. Now, on that date when the impairment was done, which is this one, do you see how much is the carrying amount of this asset? 161, which is this one, minus the depreciation gives me 135. Now, I've already said the recoverable amount here, which is the highest of the two, here it is, here. Cost here, less selling price is 55 minus 5 is 50. Value news is 40. Then you take the highest of the two. The highest is 50, not 40. 50, right? Then you compare it. The 50 must compare it to this. So, why are you showing an asset at the carrying amount of 135,625, but you are not going to recover that amount? If you sell that asset now, you're going to get 50,000. If you continue using it, you're only going to get 40. So the asset is impaired. You must decrease that 135 to become 50. How do I do that? I must account for an impairment loss of 85,625. So if I say 85, I take this 135 and minus 85, it will take me to 50 now. That's how much I will recover. Right. By end of the year, that year in 2012, your accumulated depreciation would have been 13,125 for 2011. This is 2012 plus the impairment to take it to 125. How will the note look like? The note, here it is. The asset was bought as 175. The accumulated depreciation is 13,125, having a carrying amount of 161875. You depreciate to this year 26,250, which is 2012. Then you account for the impairment loss of 85,625. The asset is at 175. You see, this 125 is the one that I was explaining here. Here's the 125. This is this one here. All right. And you see now, the carrying value by end of that year is 50,000. Okay. Now, in this exercise, the carrying amount, sorry, the impairment was done at the end of that year, 2012 year. Right. Now, let's look at this one here. It talks about the company bought a motor vehicle for 450 on 1 January 2011. The motor vehicle has a 3 years useful life, straight line on this date. Now, you see, do you see this one? When is the impairment done? If you check, is 1 January. What is the carrying value of this motor vehicle by 1 January? I can tell you now it's 300,000 because 450, if it's over 3 years, it's 150 a year. So if I minus 150 for 2011 against the 450, it gives me 300,000. The carrying amount by the time I make should be 300,000. Right. The other issues that are written here in terms of the fair value of 90 and 100, it's fine. We know we must take the highest of the two between 90 and 100. and in this case 100 is the highest amount, right? Now let's then continue in terms of this exercise. We must calculate the carrying amount of this asset up until that date, and then we take the highest of the two, we calculate our impairment loss, right? Now here we go. 450 divided by 3. You see, by the end of 2011 this asset is 300,000, and here when this impairment is done on this date, the asset carrying amount is 300,000, which is this one here. And then we do the impairment test. The impairment test says take the highest of the two. The highest between 90 and 100 is 100, which is this amount here. So we are showing the asset at 300,000, but you are not going to recover. The highest you can recover is 100. So the asset is impaired. Then your impairment loss is 300,000 minus 100,000. It is this 200,000. That is your impairment loss, right? Now, after you've put this impairment of 200,000, do you see it changes your carrying amount from this one minus this one? So your new carrying amount, like it's being said here, it's 100,000, right? Now, remember this 100,000 is at the beginning of the 1 January. Now it is the new amount at 1 January. It must be depreciated for that year, isn't it? So the depreciation is over 3 years here, like they're saying. So already 1 year is gone here. Already we've depreciated 1 year. So we're left with 2. 2011 we've depreciated. We're left with 2. By 1 January 2012 we are left with 2 years by that date. Now what you need to know is that your new value by that time is 100,000 now, this one. So for 2012 you must depreciate. Here is the 100,000, you must depreciate it for 2 years to get 50,000 depreciation, right? The carrying amount in 31 December, which is 100,000 minus 50, the current year's depreciation, it gives you 50,000. Accumulated depreciation is 150 plus 50 plus 200,000. This 200,000 is the impairment, which is this one here. You see, right? It gives you the 400,000. Let's then check the note, how it looks like. We bought something at 450, depreciated it in 2011, have a balance of 300. The depreciation is okay. Just to take it through the right process. Since the carrying amount is 300, you've got an impairment loss of 200. If you say 200, you minus that 200 from 300,000, the carrying amount, do you see it becomes 100? No, because you're saying 200 minus this one, right? It leaves you with 100. That 100 must be depreciated over 2 years. Divide by 2, it gives you this 50 here. And then your carrying amount is 50. 450 minus 400, right? This 400, how do I get the 400? I can even show you from here. It's 150, this one, plus 50 takes me to 200,000, plus 200, it takes me to 400,000, which is this one there at the end there. Okay, now I hope you will be able to understand impairment. Thank you.